Okay, well, it's time now for a look at some business news. And the political situation in Italy is having a situation on things there. Yuka Royer is with us in studio to tell us more. Yuka, I imagine the markets, shares in general, reacting to that political stalemate in Italy.
Well, Italian bonds and shares have been sold off as another election looms on the horizon. Now, Italy is the most indebted country in the Eurozone after Greece, and political uncertainty certainly doesn't help alleviate worries about the state of its economy. Georgina Robertson has more.
Political turmoil with repercussions for the whole European bloc. The looming elections are being talked about as if they're a referendum on Europe, and the political uncertainty is echoed by volatility on the markets.
Financial markets matter a lot, especially for a country in which the public debt is so high. If the Italian citizens' vote goes in one direction, which is rather different from the direction in which Italy is supposed to go according to the markets and according to the European partners, of course there's a problem there.
Italy is the third largest economy in the Eurozone, after France and Germany. It accounts for 15% of the bloc's GDP, but it also accounts for 23% of Eurozone public debt. It is big enough to throw the whole of Europe into disarray. Moody's has warned it could cut Italy's credit rating. A downgrade would make it more costly for the government to pay back its debt, raising the cost of borrowing. This, coupled with the bond sell-off triggered by the uncertainty, will create difficulties. Italy had planned to raise €250 billion in bonds in 2018. More than two-thirds of the government notes are held by Italian residents. The European Central Bank also holds 15% of Italy's debt securities. Any debt crisis would hit the Italians hard, and the ECB. Too big to fail and too big to bail is a current catchphrase being applied to the Italian economy. The recent Greek debt crisis was a crunch point for the bloc. Italy has the potential to be a far greater threat to the Eurozone.
Well, let's look at the latest figures in the financial markets then. And the European markets opened in the red across the board, as you can see, with London's FTSE down at fifth of the percentage point. Let's look at Milan, FTSE MIB, down almost 2%. Now, concern over Italy has spread beyond Europe. Asian markets were in the red across the board as well earlier this Thursday, but a revival in diplomatic talks with North Korea has provided some uplift in that region. The euro has also been under pressure. It's now trading at about $1.16. In the past month, though, the euro has dropped about 4.5% against the dollar to its lowest level in 6.5 months. As you can see there, a dollar dropping to a monthly low there. Let's take a look at some more business headlines at this hour now. And the week-long strike by Brazilian lorry drivers is having an impact on the country's financial markets as well as its exports. Meat group ABPA says Brazil lost 120,000 tons of potential exports of chicken and pork. Shares in state oil company Petrobras plunged as much as 15% on Monday after the Brazilian government offered new fuel subsidies to placate strikers. Nissan is cutting production in North America by as much as 20% to cope with a decline in car sales. According to Nikkei newspaper, reductions are already in progress at 2 assembly plants in the United States and 3 in Mexico. The Japanese automaker is not planning any job cuts. Venezuela has warned businesses not to slow operations during next week's monetary overhaul. The government is set to remove 3 zeros from prices, but critics say the cosmetic redenomination could create chaos because it is being implemented too quickly. Finance officials are gathering here in France for a meeting of the Organisation for Economic Cooperation and Development. On the sidelines, top trade officials from the US and the EU are set to discuss their trade dispute. EU Commissioner Cecilia Malmström will meet her counterparts Wilbur Ross and Robert Lighthizer to negotiate a permanent exemption to US tariffs on steel and aluminium. It comes as a temporary grace period runs out on Friday. German Chancellor Angela Merkel, meanwhile, voiced concern that Donald Trump's America First policies are weakening the network of multilateral organizations. Take a listen.
Using the opportunities of globalization whilst at the same time reducing the risks is something we can best achieve together. But instead of that, we see that multilateral initiatives are being questioned. This is worrying, since we must not forget that our multilateral global order is an important lesson, which we learned from the terrible world wars of the last century.
Trade will certainly be a big topic at that meeting of OECD here in Paris this week.
OK, Yuka Royer with the business update. Thanks a lot for that.